Hello there, my friends. Chris Marcus here with you for Arcadia Economics. Hoping and wishing you are happy, healthy, and safe out there, wherever you may be today, doing something fun, enjoying what's happening in the world, in the markets, and making it all fun, enjoyable, and having a good time with it. Fortunately, that's what I've been doing over here and what I will continue to share. And speaking of which, had quite a fun time going on to Kai Hoffman's SOAR financial program the other day, where we talked about silver, what's happening in the markets, the election, and had a good talk. Kai's a really cool guy who goes to a lot of these conferences, really big gold and silver history and background. So I think you will enjoy that. He kindly allowed us to repost it here, which will be coming your way. But check out his YouTube channel and website, SOAR Financial. Link in the description below. And with that said, here is today's episode.
Welcome back, everybody. SF Live, episode number 91. This is a special one. I'm joined by Chris Marcus in a few seconds. He's with Arcadia Economics, and we're going to talk about silver, all things silver related. U.S. elections, prices, catalysts, everything. But before we get started, please be reminded to use hashtag AskARC for your questions during this live stream. You can post them here on Twitter, and we'll get to those questions at the end of our conversation with Chris. And make sure to use that function because it is an interactive format. This is for you. This is live. Make sure to use that function. Get your questions in about anything silver related. We'd be happy to answer those. Doesn't matter if it's deodorant, silver in deodorant, or silver in coins and bars. So get those questions in. Also follow us here on Twitter and YouTube, of course, as well. And really appreciate Chris joining us. And I'm switching over to him right now. Chris, thanks for joining us this morning. I've been looking forward to this interview for a while now. How are things?
Everything is great. It's always a pleasure to see you, Kai. I miss seeing you in person. Although hopefully before we're done today, I didn't know they made silver deodorant. Maybe if you can tell me where to find some of that or any other products that have silver in them. Although I guess that's one of the fun things about silver, that especially for anything going green or with electronics on it, all requires silver, which I think will be one of the forces driving the demand going forward. And talk more about that.
I think I've seen a couple deodorants that actually have silver particles in it to stop the odor, right? So antibacterial functions used there. I'm surprised they haven't put copper in a deodorant yet or something.
Move on for that.
So, but before we get started, before we dive in more into the topic of silver, just give us a quick rundown. Who are you actually? What do you do at Arcadia Economics? What is Arcadia Economics, and who's Chris Marcus?
Well, I guess Arcadia Economics has morphed into Silverbug Central. I may be in the running for world's biggest silver bug. I don't know if that's a title to be ascribed for, but to make a long story short, about 10 years ago or 12 years ago when the housing bubble collapsed, I just graduated from Wharton, was trading equity options, running a specialist post on the New York Stock Exchange. Found it interesting how anyone who had seen the crisis in advance talked a lot about gold and silver. While Ben Bernanke said subprime was contained, Hank Paulson was holding his hand. And Kai, as I appreciate that, you do for your audience, and I mean, it's actually pretty simple stuff. One side's been lying, and in my opinion, and then there's another side that gets these things right. That was life-changing to me. Started researching gold and silver, left Wall Street because I felt, A, this was where things were headed, and B, it's just the darn most fascinating thing I ever expected to find. I mean, if you told me when I was undergrad in college I would be here today, I wouldn't have believed you. But fortunately, one of my favorite parts is that the data and the facts and the evidence speaks for itself. I just try and point that out in a way that helps people connect it, because it's all out there. And, we can dig into that today.
Yeah, it's interesting. It's all out there, but it seems like the general market is completely ignoring it. So we've seen the S&P run from high to high, the Dow Jones running higher and higher because of all the cheap money that's out there, obviously, and it's looking for opportunities to invest and generate a return, because the government bonds or treasuries don't give that to you anymore. But silver and gold seem to be more realistic, and today is a great example in the market. Gold and silver are up. Silver's up 2%, gold is up a little over 1%, and it's more a reflection of what should be happening in the market, that volatility. Maybe we could talk about the price action today a little more before we dive deeper into the fundamentals of silver and maybe some future catalysts as well.
Sure. Well, as you mentioned, gold and silver are both up quite a bit today. Nice 2-day rally for silver. I see about 25.10 on the Kitco chart, probably slightly higher on the futures. And it's interesting. You mentioned they don't often react as you would think. And that was my conclusion pretty early on, especially in 2011, where it's like the money printing never stopped. You saw the rally end. Fast forward a few years later, as I dedicated my life to trying to figure out what was going on there, and we can dig into it or leave it aside depending on if you want. But I mean, the stuff is traded in paper. And I know some people like hearing that or some don't like hearing that, and that's fine. I can only tell you what I see. And I mean, when you have that much more paper out there, that's what determines the price. And certainly there's plenty of examples of things that, especially in 2008 when silver goes from 21 to 9 in the midst of Bear Stearns failing, Lehman Brothers failing. I had the fortunate pleasure to interview Bart Chilton, who talks about how some of the things that were going on behind the scenes. And then what was to me very odd was that silver and gold dropped while there was a physical shortage of metal, to the degree that Miles Franklin, which is a metals dealer that I have a partnership with, Andy Schechtman talks often about, he thought they were going to go out of business because they couldn't source metal. European distribution offline, U.S. Mint offline, Canadian Mint offline. So, the stuff is priced in paper. And if you want to hammer the bids that are out there, the banks have the ability to do that. I think there's a shelf life on that. And I don't know that I could say that what we've seen, up $1 the last 2 days is necessarily the end of that. Although I would remind folks that JP Morgan did get fined $920 million a couple of weeks ago. A lot of these banks have been fined. I get it. People like the idea that our markets are free market functioning markets. Again, I can just report what I see. And so that is the primary catalyst. But I think driving from a longer term perspective, what's driving all this is that, Kai, people aren't morons, and governments and central bankers can treat them like they're morons and they can act like they're morons. But what is somebody supposed to say when you look at the last half a year of the Fed? Quantitative easing. 8 days later, unlimited quantitative easing. 0% interest rates till 2022, which means forever. Of course, they delayed that till 2020. What is the Fed looking at that makes them say, well, gee, we're going to have 0% till 2022. No, this idea that they're like calibrating, it's like an Excel spreadsheet. No, it's got to be 0.23, not 0.2. I mean, it's absurd. And I can't promise to give any high-level brilliant analysis other than to point out, like, some of these things when you just, here's my investing rule of thumb. Say it out loud, especially if you have a child or a spouse. Say, like, well, economy just got slaughtered because we had a Ponzi scheme going in mortgages and a lot of debt, and we're just going to print and borrow more, fire up a fresh batch of hundreds, and that's going to solve it. And like, gee, that sounds a little odd. And, well, because they're lying to you, which is why, again, I appreciate shows like yours where you're not lying to people.
No, and I'm German, right? So I remember the photos of the baskets, the laundry baskets full of paper that you're trying to buy a loaf of bread with, right? So as Germans, we always had an affinity to gold and silver anyway. So we were a special breed of people in that regard because we've been screwed over by certain agreements that we signed in the past that we decided to get rid of certain debt by just increasing inflation. So that worked for a while, but I don't think people felt too great about how it went all down. So that's why we're securing our wealth with gold and silver. And Germany has been a very strong proponent of gold and silver ever since. And even in the junior market, and I'm coming down to stock level right now, we've been super active in that regard because we always had that affinity. It's maybe in our genes now as well. You said a couple interesting things, and I should have taken note on that as well. Like the last couple days, like gold and silver have moved. Is that maybe forecasting anything to the U.S. elections already, or is that just general volatility right now?
I mean, it's a great question. It's how I think people should be responding to this election. I mean, because Kai, I promised you on Twitter, ironclad election scoop. You thought it was Kanye West. I'm not sure if he's going to win, but I will guarantee you one of the winners of the election is going to be the Fed's printing press.
That's
guaranteed.
Yep.
Hands down. Anyone wants to challenge me, let me know anytime. I mean, they're talking about, in Congress, well, we need the next stimulus bill. Okay, so first $3 trillion wasn't enough. I'm assuming that an ounce of silver, that the next one won't be the last one. And I don't know. I mean, it's like if we're this late in the game, it's not like the debates are saying, hey, how are you guys going to pare down that debt? The debt ceiling limit comes back next year. Hey, would someone ask either of the candidates, hey, what do you think about what the Fed's doing? This looks a lot what maybe they could watch your show and say, hey, this actually does have some similarities to what happened in Germany. And even, quite a fascinating era following what happened with World War I, then those reparation payments that were opposed that were impossible for them to meet, that facilitates an environment where someone can come in and say, hey, well, for the good of the people, this is what we need. Let's hope things don't come to that here. But, it's like again, people aren't morons. Either candidate is going to print a lot of money. You could make the case that gold and silver should be a lot higher. I don't know. I don't know. It's not like these guys were introduced in the last day or so I don't know how much. I don't know. Maybe people are just starting to feel it more and saying.
Well, you see it as more as well. Like even here in downtown Vancouver, some coffee shops have closed down due to COVID, like permanently closed because of the pandemic. So you're starting to see the ripple effects now of this pandemic, the lockdowns, the economic turmoil that's bound to happen. And what are they going to do? Like you can't have, like in Canada, like we have 35 million people living here. I'm not sure what the percentage of or laborers or workers is, but you can't have unemployment explode. You'll have massive issues. You see in downtown Vancouver already what is happening on the streets. Like the east side is sort of spreading out into the downtown core. Unfortunately, you see homelessness increasing and all the other issues that come with it, right? So the logical consequence is you have to give those people money to keep them like either employed by giving cheap loans or credit to companies and businesses, or you have to send them another $2,000 check, right, to keep them somewhat above water. And like, what is that going to do? Yes, it's going to create inflation, but people that are smart, they're buying the dip lately. And we've seen that happening ever since really April, May, when gold and silver dipped, and I'm hoping you can confirm that as well. People started buying gold and silver. And I've said that in an interview in May as well. I think it was with Kitco. They're like, buy the dip, people. And we're seeing that again. This is like the 5th or 6th time gold has dipped down to a certain technical level, and it just bounced right back up. And maybe people are smartening up, like fingers crossed, right? And what is happening there and trying to preserve some wealth.
Yeah, it's funny you mentioned that because I remember back in March, I was on the way to the PDAC conference. And then, so it was around that time, and it was funny, every time on the way through JFK, on the way there, and on the way back, each day, like the market and gold and silver had just gotten hammered. Yet, like you pointed out, there was a surge of metal buying across the globe. I bring bullion dealers onto my show. I talk with Andy Scheckman and Miles Franklin each week. And actually it was interesting because remember when I was traveling back from PDAC, I emailed him because I'd heard some dealer ran out of silver, and he was saying, we've never sold this much. And, it's slowed down a bit since then, but, there was certainly quite a rush. And I asked him, what happens on the days when the price drops for reasons that don't seem to have any fundamental basis? said people keep buying now because they know it's bullshit. Excuse my language, that was the quote though.
Oh, this is like an online thing. You can say whatever you want.
And I thought that was interesting because you know well that 2012, 2013, we would hear these stories, the price drops, and you'd hear like, oh, this guy, longtime gold and silver investor, just couldn't take it anymore. He threw in the towel. That's different now, where it's like, you know, there's a lot of shows out there. I try and share what I can. I know you're explaining things to people. There's a growing awareness of, all right, well, fine. If a bank wants to spoof or, you know, hammer all the bids when the market's illiquid, people get it. And it's kind of like, to me, it always seemed like it's based on a secret lie. And once enough people realize what's going on, that changes the dynamics. I think we're seeing that now. When is that seen more forcefully is a good question. Although I would point out that, all right, I'm a big silver guy. Silver's at $25. I can't wait till it hits 50. I'll be like, all right, I'm done, man. I did my part. Yet for the gold people, we're not talking about one day anymore. We're not talking about, you know, oh, well, Uncle Bob, the crazy gold bug, is going to be right eventually. I mean, it's been over 2,000. It's at close to the all-time highs. So, I mean, and not only for very clear and understandable reasons, but for reasons that, because we sit here today and it's not like, all right, well, we weathered the storm, we're going to cut interest rates, unwind it. They're just getting ready to do more.
No, I've been in the industry for like 10 years, and the macroeconomic picture was always great. There was always reason for gold to go up, but now due to COVID, precious metals have to go higher. Like I'm running out of arguments for the counter side. There is no more point, right? And we've been printing money for quite a while now, and it hasn't really caught on. The inflation, fortunately, the economy has sucked it up so far, but that's not going to last much longer. So that's my personal opinion on that. We've been drifting way off script, by the way. This has been a fantastic conversation. And
man, I had one comment on what you said.
Yeah.
Part of what I think many people don't factor in, maybe I was just lucky to have this explained well when I was training as a trader. The difference between the fundamentals and a profitable trade, it's great if you realize something that's out of line, but to get paid off on that, you're waiting for the rest of the world to understand what you already know. So, all right, you know, I've been sitting here talking about gold and silver, you the same, for like 10 years, but what's really going to change that, and what I've always felt, is when more and more people start to see what we're seeing, start to get what we're seeing, and start to understand why it's not possible for the Fed or the governments to undo this. So, yeah, it's great when you see something that's out of line, but what is going to change that is when other people see that, and perhaps maybe that's the encouraging part, is that maybe unfortunate the way in which it's happening, yet people are seeing that now, and I think that's why the prices are higher than a year ago.
Yeah, I think so, because the S&P used to guarantee you almost 20% per year. Why would you not park your 401k money in an S&P ETF, or just follow the market along, or own the blue chip stocks like the FANG stocks, right? But that's changing. They've been dropping off a little bit, and there's way more uncertainty, so people are coming back to the space, which I personally prefer, of course, and it just makes a lot of sense. So you don't have to go full 100% gold silver, in my opinion, but maybe hedging a little bit, and that makes a lot of sense.
I wish you had told me that in 2012, that you didn't have to go all in. But
well, I'm here as well. I'm trying to play the advantage that I have, right? So I don't have a direct line to Mark Zuckerberg, but I can call a couple of mining CEOs if I have a question. So that's the advantage I'm trying to play here, at least. You mentioned the printing press obviously is winning, but let's choose between Biden and Trump and see which one do you think, or who of those guys is better for the silver and gold price, short term and midterm? Is there one you favor over the other? I've been hearing certain things.
I mean, let's break it to two answers. Is there one that should make a difference? Is there one that will make a difference? I don't know. I guess theoretically, it seems like Biden might be more likely to print faster. And again, I don't want to get anybody riled up. I think they're two wings of the same party. Obama and George Bush, I can't tell the difference. They both doubled the deficit and started a lot of wars and did things that are against what I believe in, and we'll leave it at that. So, I guess you could say you'd think Biden's going to print faster, yet keep in mind, here's Trump, who talked about the economy being a big fat bubble while he was campaigning. And then for the last 2 years, he's been pleading for negative interest rates. So, in the end, that's the one thing that the parties can agree on, is to print money. And they're going to duke it out. Pelosi wants this subsidy in the bill, and the other guy wants that one. In the end, that's the one thing they can agree on. So, to me, what's going to affect the pricing of the markets? Again, I'd look at what is happening, at least on a day-to-day basis. I'd look at what's happening on the COMEX, where you continue to see record-setting COMEX deliveries, if you continue to see record-setting amounts of metal go into the SLV and the silver trusts, I think that's going to have a much bigger impact. But I don't know, maybe to the degree that people see Trump as the business guy and Biden as the liberal. I guess you could say if Biden wins, maybe there's, back to what we said earlier, that on some level to overwhelm that paper pricing when the actual market demand is significant enough. So maybe Biden could push that. Because I guess maybe one better way of expressing that, when the metals were coming down from 2011 until last year, let's call it, you can look at the Fed's balance sheet. It was growing the entire time. It dipped for a second in 2018, yet part of what allowed that to happen was they killed the public interest. So if maybe Biden wins and scares people, the gold bugs even more, and there's some more pressure. But I guess maybe the bigger answer is that while perhaps it should matter, I don't know that that's really the primary factor that is going to price the metals, in my opinion.
Yeah. Let's see if I can get some more advice out of you. Like, how would you set your portfolio, or how is your portfolio set up right now in terms of the U.S. elections, but also overall government stimulus happening, 2 trillion, 1.2 trillion, doesn't really matter.
Sure. Yeah, it's a great question. And I'll preface this. This is not necessarily what I would recommend anyone else to do. And I will say I didn't learn that diversification lesson. Also factor in, I was trained as an equity options trader by a shop that I think knew their stuff pretty well. And it's like, it's like a poker game. Sometimes, you're going to win $10 in the pot. There's also a time when you look at everything you've seen in your entire life and you study a situation and say, this is time to go all in. Now, I'm not saying what anybody else should do, but when I left Wall Street, everything that I had was in gold, silver, bullion, mining stocks, or options on miners. Again, options on miners, I wouldn't recommend for 99% of people I know. But even now, actually, I'll give a little twist on this answer. For a while, everything I had, I was investing into building a business that I thought would be prepared for the future. So by all means, folks, even better than gold and silver, if you have a business, maybe you can add something that matches what you're seeing. If you're getting education, that's always the best investment, which I did first. Now that, I'm fortunate to get the business up and going. Again, I'm not saying this is what other people should do, but when I look at what's happening and I look at the pricing on silver, again, I had a big bet on in 2011 and I didn't sell at the top. So factor that in. But to me, I don't know, maybe silver will spike up to 50 and then come back down for a couple of years. But when you look at what's happening, there's no point in which they're going to stop printing.
No, that's great advice, actually. And I really like the one, invest in your own business or in yourself. And we don't mean spa getaways and all that stuff, but something that gives you a fundamental like basis to benefit off. The market has completely changed with the COVID crisis. Everything went online, or most of it went online. There are a lot of new opportunities being generated, even if it's just setting up a podcast. Like, people could actually make money with that. It doesn't have to be fancy equipment. I actually like reading the tips there. But invest into yourself and see if you can even make a second income, a passive one that way. So that's great advice. And let's quickly, just for a short answer, get back to your portfolio. What does it look like right now? Physical, options, stocks? What is it? What's the percentage?
Yeah, I'll finish answering that. I mean, there's physical silver and mostly silver mining stocks. Some gold miners. I try and behave myself on the options. That's a risky one that you're going to lose most of the time. I did have options on when silver hit 50 in 2011, so for a while it looked incredibly good. But the reason I do that is that, like, I don't, maybe I shouldn't say this as a financial analyst, I don't care what the price of silver is every day. In fact, I think that's the best thing I've done in my entire life. Being able to strip that aside. All right, so it goes down $1, it goes up $1. Same with a mining stock. If I can ever see how there's anything other than more and more printing I'll add an accelerating rate. Not only aren't they going to stop printing, they're not going to slow it down. They're not going to keep it at the same speed. It's going to go faster for the same reason that people were throwing the cash out and keeping their wheelbarrow in Weimar, Germany. So to me, I don't know. I think it'll be sooner than later. But that's where, I don't know. I don't want to buy Tesla stock that's up tenfold in the last year. So as long as I'm buying companies where, and again, I'm in the fortunate position, I get to interview a lot of the management. So if it's a company that seems like is in line with my values, has silver exposure, when I have cash, I add to that. Again, that's probably not what most people should do. I have a pretty specific background and I believe in what I go out there and say. So by all means, maybe factor this in, but diversify and find agriculture, gold, most of the commodities seem pretty cheap relative to what's going on. So certainly diversifying is good. Maybe I'll learn that at some point, but at least as of the moment, when I have cash, I buy silver or silver mining stocks or, sometimes gold stocks.
Let's assume somebody is watching this. This is the first video they're watching coming into this space. They want to diversify. They want to invest. What was the maybe a single piece of advice you give somebody, and how would you recommend they position? What's the easiest, simplest way?
It's a great question, and I would say a combination of start with what you're already knowledgeable in and what you feel comfortable with. So again, probably most people, if they had 100% silver stocks, it gets a little tough to sleep at night. Another good test, if you're afraid to tell your wife or your husband, I bought more of this, and you don't, then you're probably doing it too big. Maybe you're a Silicon Valley guy and the next great semiconductor stock that's going to change the world. That could be a great investment. That's not my background. So starting with something, A, if you have a background, or B, even maybe you don't have a background, but if it's interesting to you and you're going to continue learning about it, you're going to naturally be in a better position. So that, and, just thinking about what feels right are two steps that I think anyone can apply and put into action.
Fantastic. And what do you think of ETFs? Do you have an opinion on those?
Do you like ETFs? I think there's a rightful purpose for them. I don't own GLD or SLV, and I don't have any intention to. JP Morgan was labeled a criminal enterprise by the Department of Justice, fined $920 million. That's a chunk even for them. Maybe they just submitted to the Fed's discount window, but still a pretty big fine, yet they were trusting them as the custodian of SLV.
Well,
HSBC, preferred bank of Mexican drug and money launderers. They're the custodian of GLD. That, in fact, Kai, if I could add one more investment rule, or not investment rule, this is anywhere in life. I find that if you interact with people who have a reputation for finding deals that everybody wins, hey, how can I take what I'm good at? You take what you're good at. Here's how we all split a bigger pie. If you spend time with people like that and do business, you're probably going to do better than if you're interacting with people who are trying to steal your money. Maybe they steal your money in the way you think they do. Maybe when you sell your SLV or GLD, complete speculation, maybe there's an unknown fee, or well, you can't sell it for this reason, or so. I like to interact with people, do business with people who think in the first way rather than the second, and it's my thoughts on those particular ETFs.
No, that makes a lot of sense, and it sort of reflects my opinion as well. But also, with the two of us, we might have that specialized knowledge that we can invest into the companies or the product directly instead of having to go through a third party offering that. So let's leave it at that. And we're sort of running out of time. I could chat with you forever, and I want to ask you one more thing. And you recently hosted Silverfest with some great people that were on there talking about the dynamics of the market. Is there something that you learned that you didn't know before, or that changed your views on certain things that in regard to silver, or maybe a future catalyst or something that you hadn't been aware of before?
Yeah, well, I learned start planning earlier when you're doing something like that. I don't remember. I meant to send you an email and invite you, and I don't remember if I did or was just planning to do that. Would have loved. Hopefully, we'll get you involved for next year's Silverfest, which will be fun.
Love that, yeah.
In terms of actual silver knowledge, I don't know if there's any new tidbit. I guess what I find interesting is that there was, maybe a couple of years ago, after I'd been at this for 7 or 8 years, I was wondering, I'm like, the price just sits there. I'm like, am I missing something? I have a blind spot I can't see. I think about that a lot. I try and find it or talk to other people that I trust. But I guess the thing that stands out to me, yeah, if you ask a banker or Ben Bernanke or, Jerome Powell what they think, Bernanke says he doesn't understand gold. But anyone who seems to make any sense and doesn't claim to be as clueless about gold or silver as Ben Bernanke, they all say the same thing. And that was really something that stood, whether it was Silverfest or when I do the show and bring on one after another. I think Ronnie Stoifferle, who writes the In Gold We Trust report. When a guy who writes the In Gold We Trust report said, if you like gold, you have to love silver. Again, the best part is that it's not, you don't have to take my word for this. All this stuff is out there. People can double check it. They can look at it. They can see if they can figure out a way that the Fed ever undoes what it's done. And so that's something I try. Sometimes it's weird. It's like doing a show where I'm saying the same exact thing every day. So, I mean, I don't, okay, buy silver, and at some point when this is resolved, there's a pretty darn good case to be made. It's going to go up and buy a lot, but I think maybe the reassurance, hearing it from so many different perspectives, hearing what's going on in the COMEX, hearing what's happening with the trust, hearing what's happening on the physical level, it's just almost like this one-sided boxing match where you're pounding this Keynesian carcass with data, and that was my takeaway.
No, that's very good. And of course, as an investor in this space, I'm always looking for confirmation bias that I'm on the right side of the trade, right? So I'm trying
to find out where I'm wrong or what I'm missing. I've spent the last 11 years, I'm not saying that's just my style. It's like I'll think this makes sense, and then why is the guy betting against me? I think they're mistaken for the reasons that we described. I guess we'll find out soon enough who's right or not.
That's actually a very good concept. I use that for my mining investments as well, like into the companies. So I think this is great, but what's wrong with it? And that's when you get a couple of experts around you that are actually critical on certain things and ask them. So That's exactly. Chris, we got to end here. Like we were way over our 20-minute time slot. It was a fantastic conversation. I need to get you back on because I still want to talk about silver gold ratio. Do you think 76 is great or not? Should it be 15 like it was back in the day? And things like that. We could talk about this for hours and hours. So I really appreciate you joining me. But let our listeners know, like, where can they find you? Where can they sign up to your service? And where can they watch your videos?
Sure. Well, I appreciate that. And thanks again for having me on. People can find me at arcadiaeconomics.com. You can also find the YouTube show, typing in Arcadia Economics. And for anyone who might be new to any of this, I did recently release a book a couple months ago called The Big Silver Short, with the goal was really to put all this in perspective it was done interview style format. So it's not just me writing, but you hear one silver expert after another all come to the same conclusions. And if you're looking for something where you're not sure where to start and how to really grasp not just silver, but how it fits with the bigger picture, the name of that's The Big Silver Short. You can find it at arcadiaeconomics.com. And Kai, I hear we'll be having you on the show as soon as well. So,
well, we just discussed that. So November 16th, I'm looking forward to it. So I really appreciate the invitation there as well. So it's going to be good. And maybe we could talk about the silver gold ratio back then. So we haven't covered it here. So appreciate you coming on. Really, really appreciate that. It was a great conversation. Everybody else, thanks for watching. Make sure to follow us, follow Chris, follow us here on YouTube, follow us on Twitter. We're going to upload this interview also to Spotify and Instagram, so you can find it on all the social media channels that are accessible to you. And we'll come back with another interview very soon. And we need to have you back on, Chris. So thanks so much and talk soon.